This is Gary Schnitke, and this is a 5-minute Farm Doc Daily dealing with coverage levels on crop insurance and ECO use in corn. In 2021, ECO became available, and this is obviously the first year it's available. ECO can be used with RP or any other combo product, but we're going to focus on RP here because that's where most of the use is. ECO will provide coverage from 95 or 90% down to 86%, but it differs from RP. It uses county revenue rather than farm revenue when determining whether it's going to make a payment. We believe that the highest use of ECO will be on farms with high coverage levels, 80 and 85%. We began looking at this year. Again, we are going to focus on RP because it's the most used product in the United States for corn and for Illinois as well. RP has over 90% of the acres insured in corn in the U.S., and that has been growing over time. And it took away acres from YP and RP, and its successors products began in 1996. In any case, we're over 90% of the acres in 2020. Here is what average coverage levels look like across the United States. We calculate an average coverage level for each county in the United States for RP products, and for Champaign County, Illinois, the average coverage level is 82%. And that means that if you look at policies in Illinois, in Champaign County, Illinois, 82% is the average of all those RP coverage levels. When we look at use of RP and the average coverage levels, there are certain counties that have below 0.7 or 70% coverage levels. Those tend to be in high-risk areas such as the Great Plains of Texas. There's a whole set of counties with 70 to 80% coverage levels. Those tend to be in the Midwest, but not in the heart of the Corn Belt and along the eastern seaboard, Great Plains, and south. These areas are large production areas for corn, but have higher risk than at the heart of the Corn Belt. If you look at the heart of the Corn Belt from southern Minnesota through northern and central Iowa, northern and central Illinois, northern and central Indiana, through parts of western Ohio, you will see that the average coverage levels are above 80%. This area tends to have lower production risk compared to other areas around the nation. It's in those areas, those 80% and higher coverage level RP policies, that we think we will see the most use of ECO. We're beginning to get a feel for where ECO has been used by looking at policy counts as of May 3rd. If we look at that point in time, 2.5% of RP crop insurance policies used ECO. So very light use, I suppose. Only 2.5% of the policies added on ECO. Somewhat surprisingly, though, of that 2.5%, most of those were at the 95% coverage level, the higher coverage level, rather than the 90%, which was the lower coverage. So 86% of them came at 95% coverage level. If you look at those green counties on the previous map, those counties had 4.7% of the use, 2-3 times as high as the rest of the 70 to 80% counties of 1.7%. And then those counties with below 70% coverage levels had a 0.6% uptake on ECO. Again, if you look at those counties that took higher coverage levels, you would expect that ECO would cost less than those counties because of lower production risk. And those farms in those counties may have had an appetite of having higher coverage levels because they were maxed out at the 85% level. You can read more about this in my Farm Doc Daily article, which is linked to in this YouTube description.